All right, welcome into Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy. Thank you very much for joining us here on this Wednesday morning. We're having fun. Hopefully you are too. Let's get, this is halfway point, right? Let's get you updated on the prices at the halfway point just after halftime. The band is on the field, so we'll give you what the corn board's doing for us. But I did the radio show earlier this morning. I can say that there wasn't a ton going on, but we do see a little bit of a better board here with corn. March is up 3 3/4 cents to 478 1/4, just a penny off the high of the day. We've had a 5 1/4 cent range. May is up 2 3/4 cents to 487 1/2. All right, that's the corn board up. Most of the gains are up front. We do have gains all the way across the board, but anywhere between 1/4 cent better to 3 3/4 cent better with those gains coming in March and May. All right, let's take a look at soybeans. Not as much going on here. March is up 1.5 to 10.49. That's 5 cents off the high of the day, 5 cents off the low. We're smack dab in the middle of a 10-cent range. May, that's up 3/4 cent, 3 ticks. 10.62 is last there, and that's 5 1/4 cents off the high and about 4 1/4 cents off the low. So that's soybeans for you. We're anywhere between a penny lower to a penny and a half higher across the board, with August coming in sharply unchanged at 10.67 1/2. How about Chicago wheat? That's down about between a penny to 2 1/4 cents across the board. Most of the losses are out in the deferreds. So March is down a penny up front, 5.45 1/4 is last there. And that's in the middle of that, well, I'm going to call it about a 9 1/2 cent range. May, that's down a penny and a half to 5.56 3/4. All right, so that's what's happening in wheat in Chicago. Let's move from the Chicago wheat to the hard red in Kansas City. Let's got a little bit of a lower board there. 4 cents lower in March, 5.56 3/4 is last, and that's going to be 2 3/4 cents off the low of the day, well off the highs by 6 1/4 cents. We've got May down 3 1/2 cents to 5.66 3/4. Let's take a look and see what we've got going on in the spring wheat then. Spring wheat in Minneapolis down 2 1/4 cents up front, 5.87 1/4 is last there. Just 3 ticks off the low of the day. But as you go out the deferreds, we start to get some strength, enough strength that we've got SEP in December a half cent higher in spring wheat in Minneapolis. SEP's up a half cent to 6.19 1/2. D's up a half cent to 6.37 3/4. Let's take a look at cotton, and we'll get to our guest analyst here. Cotton, let's go right to the March, sharply unchanged at 67.50. We got a May board down 4 points to 68.66. Folks, this cotton market has been one of the quieter markets of all the things that we report here for a while now. It just really isn't done very much. All right, let's bring in our next guest analyst, Riley Schwieger. He's with CHS, and it's now Scott Wilson. That's not Riley. Hello, Scott.
Sorry, we switched you.
Yeah, I got to update my guest list here. Thanks for coming on, by the way. Happy New Year to you.
Thanks for having me, Scott. You too.
Yeah, what are your thoughts? What's going on?
Well, I think volatility is going to be the name of the game for the next couple of weeks. We got potential policy changes, we got sanctions, potential tariffs, ceasefire discussions, all that going on, all those things that could typically manipulate the market. So we'll have to see what happens. Sanctions have been the main driver. Still unknown how much Russian crude could be removed from the market, but it has been very bullish. We've seen crude and gasoline futures had the highest intraday trades today since August, and the diesel the highest since July. So that has definitely been a bullish fundamental in the market.
Look, we had a bullish report on Friday. Is that going to stick, or do you think that might be slowly wiped away as we go through? I mean, I know we've got some volatility when it comes to weather, spring planting, blah, blah, blah. But that was a pretty big drawdown when they took the bushels per acre down in corn, wasn't it?
Yeah, that was a lot larger than we anticipated. Yeah, our grain guys have been talking about that quite a bit in the office, and seems like they kind of overshot in their initial indications, and yeah, it came down significantly on Friday.
Yeah, I mean, and so my question, I guess, is around the office or the water cooler, whatever you guys hang out at. Are you telling your producers, is this a place they want to start letting some cash sales go or buying some puts? Or, I mean, are you going to reward the rally, as they say?
Honestly, I don't get involved in grain that often, so I honestly am not sure what they're looking to do with that. I'm more on the energy side, Scott, so I apologize.
No, that's all right. We'll switch to energy. So we've seen some great moves in crude as of late, the last few days. What do you think's behind that? I mean, is it going to be geopolitical? Are we going to look at a demand situation? I mean, tell us where you think that's going to go in the next couple of weeks.
Yeah, so like I said, all those things I indicated earlier, those are things that are going to drive the market substantially. So, and then on top of that stuff, we did see a smaller than anticipated draw in crude, and then larger than expected builds in both products. So where we're at with crude inventory at the lowest level since April of 2022. Good news is, though, Cushing, which is the main storage hub in Cushing, Oklahoma for U.S. crude, saw a build, which was very much needed. Inventory at that storage hub was at its lowest level in a decade, and then at the operational bottom of 20 million barrels. Once you get below that at that storage hub, some of that crude is actually unusable. So we need to stay above that. So we need builds in that. So we have got a different picture. Crude at the lowest levels, like I said, in a while, where gas and diesel both saw good inventory builds. So gas at the highest inventory level since February, diesel at the highest level since January. So that's good to see. So obviously we've seen a lot of demand for diesel and for propane with the cold snap that we've seen in the last week or two. So diesel demand jumped 20% from last week. A lot of that is heating oil demand, and then propane increased 11% week over week. So everything is overbought at the moment. I think moving forward, we're just going to have to see how these sanctions play out, and if there's any changes in the coming weeks with policies.
Okay, last question, real easy one before we go. When are they going to refill the Strategic Petroleum Reserve?
So they're slowly working on that as we speak. So we have increased it some. We do have a long way to go to get to where we're at. We'll have to see if we see any change, just because everything is moving to, not everything, but a lot of things are moving electric. So we'll have to see if that changes anything in the near term for how quickly we do refill that reserve. Obviously, when prices are better, that makes it more advantageous to fill that when prices are where they're currently at. So we'll have to see if we get a move down.
That's how the government trades, right? All right, appreciate you coming on. Thank you very much, Scott.
Yeah,
Scott
thanks,
Wilson
Scott.
coming to us from CHS Hedging in Bloomington, Illinois. We're going to go away. We're going to pay some bills. We're going to come back and talk more livestock with me right after this.